Welcome back to The Explainer. So, let's talk about Bitcoin. The last couple of months have been, well, a bloodbath. Today, we're going to break down what's really going on behind this dramatic sell-off.
Yeah, you're seeing that right. A 31% plunge in just about 60 days from its all-time highs. I mean, to put that in perspective for you, it's actually doing worse than Treasury bonds this year. That is just brutal.
So, the big question on everyone's mind is, what in the world is causing this mass exodus? Is this it for Bitcoin? Well, as you might guess, the real story is a whole lot more complex than what you're seeing in the headlines. So, let's get into it.
All right, first up, the MicroStrategy squeeze. Now, our first major factor might be a company you wouldn't immediately think of, MicroStrategy. They are one of the biggest corporate holders of Bitcoin out there, and their unique situation is creating a serious pressure point for the entire market.
Okay, so to really get why this is such a big deal, you got to understand MicroStrategy's game plan. They've basically gone all in, using a mountain of debt and issuing stock to buy a ton of Bitcoin. So their entire business model, their ability to pay back loans, it's all tied directly to the price of Bitcoin. If that price drops too much, well, they could get hit with margin calls, which is a massive problem for them, and because they hold so much, a massive problem for the rest of the market too.
And then came this bombshell from their CEO. He basically said, we can sell Bitcoin and we would sell Bitcoin if we needed to. Now, this was a huge shift. It was the first time they ever admitted out loud that push might come to shove and they could be forced to dump their massive pile of Bitcoin just to stay afloat. And you can literally watch that pressure build right here. Just a few months back, they had enough on the books to cover their debts for over 100 years, a century. Today, that's down to 69 years. Now, they did just raise some cash to give themselves a 2-year cushion. But that's just a band-aid, right? The real problem is, if Bitcoin's price keeps sliding, that 69-year runway is going to shrink even faster, pushing them closer and closer to that breaking point.
So here's the really crucial part. This whole situation basically paints a giant target on their back. It creates a massive financial incentive for other big players to actively push the price of Bitcoin down. Think about it. If you can trigger a panic, force MicroStrategy to liquidate their holdings, well, you could be there to scoop up all that Bitcoin at an absolute fire sale price. It's a classic predator move.
Okay, so it's not just about corporate pressure. Now we've got to talk about the whales. We're seeing some really interesting moves from the whales. You know, the earliest and biggest Bitcoin holders. And what they're doing adds a whole other layer of intrigue to this whole story. Just recently, we saw a Satoshi-era whale, we're talking someone who got into Bitcoin way back in the beginning, cash out something like $1.5 billion. So why would they do that? Well, there are a few possibilities. Could be simple profit-taking, I mean, why not? Or maybe they're moving into something more traditional, like an ETF. But, and this ties right back to what we were just saying, it could also be a calculated move to deliberately crash the price, shake out the weak hands, and then buy it all back for cheap. Now, if you're enjoying this deep dive, do us a favor and hit that like and subscribe button so you don't miss what's coming next. Because so far we've got corporate pressure and these whale games. But believe it or not, there's a third, even bigger force at play here.
Next up, the global connection. So this next piece of the puzzle actually has nothing to do with crypto directly. We have to look at the global bond market, where a massive, highly leveraged trade is starting to completely unravel.
Okay, so for years, big investors have been playing this game called the yen carry trade. It's pretty simple. You borrow money super cheap in Japanese yen, where interest rates are practically zero, and then you invest that cash in things that give you a higher return, like, you guessed it, crypto. But now that entire trade is unwinding. People are being forced to sell off those assets to pay back their yen loans, and that creates selling pressure everywhere. And when a trade this huge unravels, it's like a wrecking ball crashing through the markets, causing these violent drops in places you'd least expect.
All right, and finally, there's a shift in the narrative. We got to talk about the story, the hype. Because the big story that a lot of investors were banking on, well, it just hasn't panned out.
Remember all that hype? The expectation was that 2025 would be the year of massive institutional and even government adoption, pushing prices into the stratosphere. But what's the reality? Well, that fizzled out pretty quick. The institutional money has mostly just been regular folks buying through ETFs, not huge pension funds going all in. And the US government, they're holding what they've seized, not going on a shopping spree. So for a lot of people who bought into that hype at the top, this reality check has meant selling at a big loss. Okay, so a 31% drop, it feels absolutely catastrophic, right? But to really get a handle on what this means for Bitcoin's future, we need to do something really important. Zoom out and look at the history books. So let's put this into some historical perspective. Has this kind of thing happened before? Let's check the data.
So take a look at this. Back in 2018, the bear market was a total nightmare, an 84% drop from the peak. Ouch. Then in 2022, it was still brutal, but a little less so, down 77%. So what's the trend here? While Bitcoin is still, incredibly volatile, the crashes are actually getting less extreme over time. The bottoms are getting higher as the whole thing matures.
What this really suggests is that, yeah, this current drop is painful, and sure, the price could definitely fall more. But this probably isn't the end of Bitcoin catastrophe that the headlines want you to believe. It might just be part of a larger pattern, another cycle in a technology that's slowly but surely becoming a little less wild.
Okay, so the verdict. Let's bring it all together. You've got the MicroStrategy squeeze, the whale games, the shifting story, those huge global macro forces, and the historical context. So what's the takeaway here? Is this the end of Bitcoin?
Well, the way our source material frames it is pretty interesting. It's not about Bitcoin being a sure thing. Instead, you should see it as an asymmetric bet. That's just a fancy way of saying an investment where the potential reward is way, way bigger than the potential loss. The core idea hasn't really changed. It's still just software trying to become a new form of money.
And this quote really drives that point home. I put 5% of my net worth into Bitcoin. If it goes to zero, the worst case scenario is you lose 5%. You see the logic. It's all about managing your risk. Put in enough that you could seriously benefit if it goes to the moon, but not so much that you're wiped out if it crashes and burns.
And really, the fundamental idea to grasp here is that all this chaos, all this volatility, leverage, and manipulation, it's not necessarily a sign that things are broken. In fact, it's exactly what you should expect from a technology that's trying to change the world. Of course it's going to be fought over. Of course people are going to try to manipulate it as it finds its footing.
Which leaves us with the ultimate question, is this a crisis or is it an opportunity? The source encourages us to look past the crazy daily price swings and think about that bigger picture. Is all this turmoil just the growing pains of a revolutionary technology, or is it a warning sign of something fundamentally flawed? That, right there, is the billion-dollar question. Thanks for watching.